You are thinking about renting out your home. Why? Because you may own a great summer or winter getaway spot that you could make you some extra cash from. However, if you're renting out your home on Airbnb or VRBO, but here's a question you need to ask yourself. What happens if a guest gets injured, damages your property, or files a lawsuit against you? Because here's the reality. Most homeowners policies were never designed for short-term rentals, and relying on the platform's protection alone could leave you with serious gaps. But stay with me until the end, because I'm going to break down exactly what you need to protect your property, your income, and your peace of mind. So, let's get started. Now that we've set the stage, let's talk about what short-term rental insurance actually is. Here we go. Short-term rental insurance is designed specifically for properties rented out on platform. It bridges the gap between a standard homeowner's policy and a full commercial policy. Here's a key point. Once you start renting your property for income, your risk profile changes. You now have paying guests coming and going, which increases your liability exposure and adds a higher risk of property damage. This is why your coverage needs to evolve with how you're using the property. So now that you understand what it is, let's address the biggest misconception I see. Property owners make the mistake of believing Airbnbs or VRBOs has them fully covered. And yes, these platforms do offer host protection programs. But here's the issue. They're not insurance policies you control. They come with limitations, exclusions, and conditions. For example, certain types of property damage may not be covered. Liability protection can be limited or denied, and claims can be delayed or disputed. The bottom line is, those programs are a layer of protection, not your foundation. And as I always say, your foundation matters. Now, let's bring this into the real world to see how this works. Here's a real-life situation. I worked with a property owner who listed a second home on a short-term rental platform. Everything was going well, steady bookings, great reviews. But one weekend, a guest slipped on the back deck after a rainstorm and filed an injury claim. Now, here's where things got serious. The platform's protection didn't fully cover the claim due to how the incident was reported. And what about the homeowner's policy? Well, guess what? That claim was denied too, because the property was being used for business purposes. Thankfully, we had already put a short-term rental policy in place. That policy stepped in, covering the legal costs, medical expenses, and protected the homeowner from a major financial loss. That's the difference between hoping you're covered and knowing you're covered. So now let's talk about what coverage you should actually have in place. Here are the essential coverages that I recommend for short-term rental owners. Number 1, starts with general liability insurance. This coverage protects you if a guest is injured on your property or if you're held responsible for damages. Number 2 is property coverage. It covers the structure and contents. This is especially important if guests damage furniture, appliances, or fixtures. Number 3 is loss of income coverage. This covers you if your property becomes uninhabitable due to a covered loss. This helps replace your rental income. Number 4 is ordinance or law coverage. This helps cover costs if you need to rebuild or upgrade to meet local building codes. And lastly, number 5, add an umbrella policy. This provides you an extra layer of liability protection above your base policy. This is building a complete protection strategy, not just checking a box. Now that I've given you the key coverages, I must share with you some practical steps you can take right away. So here's what I want you to do. First, review your current homeowner's policy and confirm if short-term rentals are excluded. Then 2, don't rely solely on Airbnb or VRBO protection programs. Number 3, make sure your liability limits are strong enough. $1 million is a common baseline. And lastly, work with an independent agent like myself who understands short-term rental risks. Because at the end of the day, this is more than just a property. It's an income-producing asset for you. It deserves to be protected like one. Now let me bring this all together. Short-term rentals can be a great way to generate income, but they also come with real risks. And the biggest mistake I see is people assume they're covered until something goes wrong. It reminds me of that old saying, it's all fun and games until someone gets hurt. But in this case, it's all good until you are sued or have to pay out of pocket. But don't let that be your situation. This is not to scare you, but it needs to scare you. That's why it's important to take the time to review your coverage, close the gaps, and protect what you've built. Now, if this content was helpful, please place a thumbs up in the comment section. This really helps with engagement and assists with pushing out this video to others. Also, word of mouth is good too. So please share this content with someone who may benefit from this topic. Then check out my video library. I have information on home, auto, business, specialty insurance, and retirement. With all this being said, please subscribe to my channel and help me get to 1,000 subscribers. But don't stop here. Check out my next video on your left for more insurance and financial tips. As I like to say, call Jay today.